Hey everyone, and welcome. So, you've probably noticed that Turkey's economy is absolutely buzzing right now. But let's be honest, its tax system can feel like a bit of a maze. In the next few minutes, we're going to give you the map you need to navigate it like a pro.
You really can't ignore what's happening. The country has become this incredible magnet for investment, for big ideas, and for talent from all over the world. That kind of energy, well, it creates some massive opportunities.
So, here's the million-dollar question, right? How do you actually tap into all that opportunity without getting tangled up in the country's pretty complex tax system? Because a great idea, that's just not enough. You've got to have a strategy. So, let's walk through it together.
Okay, first things first, let's get the lay of the land. Turkey's tax system is basically built on four main pillars, and these affect everyone, from the biggest corporations all the way down to solo entrepreneurs.
So you've got these four key areas to keep on your radar. First up is VAT, which, applies to almost every single transaction. Then there's corporate tax, which is on your company's profits. Third, you've got your personal income tax for you and your team. And finally, the really tricky rules for when money starts crossing borders. We're going to touch on all of them.
Right. Let's zoom in on the two big ones. These are the taxes that are going to impact your day-to-day business operations the most: VAT and corporate tax. And believe me, getting these right is absolutely non-negotiable.
Okay, let's break this down real simple. On the surface, it seems straightforward. VAT is basically a sales tax, and corporate tax is a profit tax. But the devil is always in the details. You're dealing with different VAT rates that can range anywhere from 1% to 20%, a bunch of specific exemptions, and really strict reporting rules that can easily trip up a new business. Yeah, it's not just about, tacking a percentage onto your sales. Just look at all these moving parts. You have to manage super detailed returns, navigate a notoriously tricky refund process, and maintain compliance, especially if you're doing international transactions. That refund process alone, it can seriously impact your cash flow if you don't handle it just right.
And let's just take a closer look at this whole refund process. I mean, it seems linear, right? 1, 2, 3, 4. But each one of these steps is a potential minefield. Take step 2, documentation. This is where so many applications just fall apart. If your paperwork isn't absolutely perfect, the whole process just stalls, and your money is tied up pretty much indefinitely.
Now, on the other side, corporate tax is so much more than just an annual chore. It's really about year-round strategy. You have to be thinking about how you structure your company for tax efficiency, how you maintain constant compliance, and being ready for a potential audit at any moment.
So far, we've focused a lot on the company. But what about you? The founder, the executive, the employee? Well, the personal tax angle is just as critical. And it's especially important if you're an expat or if you have income streams from around the globe.
This piece is absolutely crucial for any foreign professionals, for digital nomads, and for any entrepreneur who has a global footprint. Bottom line, if you are earning income while you are in Turkey, you need to know the rules.
Okay, now we get to the really, really tricky part. International tax. What happens when your company is based in Turkey, but your clients are in Germany? Or maybe your investors are in the US? This is where things can get complicated, and I mean fast. Here's a concept you absolutely need to get your head around: double taxation agreements, or DTAs. Just think of it like a treaty that stops you from getting taxed twice on the exact same income, once in Turkey and then again in your home country. It is a critical shield for any international business. So, how do you actually use these treaties to your advantage? Well, by applying them correctly, you can legally avoid that double taxation, you can reduce withholding taxes on payments, and you can create a compliant, solid structure for your international operations. It's a vital tool for maximizing your global profits. Okay, that's enough about the obligations. Let's shift gears and talk about the opportunities. Because the Turkish tax system isn't just about paying what you owe, it's also about strategically using incentives to pay less. And we are not talking about small discounts here. I mean, leveraging the right incentives can dramatically lower your overall tax bill, and that frees up significant capital that you can then pour right back into growing your business. So, where is this treasure chest of incentives? Well, take a look at these key areas. The government heavily, and I mean heavily, incentivizes technology and R&D, any business that exports goods or services, and major investment projects. So if you're in tech or you have global clients, you absolutely need to be exploring these.
Whew, okay, we've covered a lot of ground, from the core business taxes to international agreements and all those strategic incentives. So now,
let's just bring it all together and talk about why it's so important to have the right support system on this journey.
I mean, with all these moving parts, how do you find the right guidance? What does effective, practical support actually look like in an environment this complex?
You know, great support is really built on these pillars. Of course, it starts with deep knowledge of the law, but it's also about having a proactive strategy, a real partnership, and a shield that protects you from risk. Ultimately, it's about giving you the confidence to focus on your business, not on the bureaucracy. So I'll leave you with this final thought. When you master a complex system like this one, turning risks into opportunities and turning obligations into real advantages, is that just compliance or is it something more? Is it a powerful competitive edge? Something to think about. Thanks for joining me for this explainer.